Good morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 15th of September 2011. It's going to be going over the 4 majors this morning, starting with our Euro against US dollar on our CTC strategy template. Let's have a look at the daily. Here we go, you can see the massive sell-off we've seen on Euro against US dollar in as many weeks. And you can see that the fib extensions, we have tested we've now seen 100% retrace or continuation to the downside from the initial breakout. That coincides with 13,500. You can see the wick of the actual candle. Just tested it. This here is an is a support and resistance level on a daily time frame. If I zoom out, you can see clear support, resistance, support, resistance, and further support and resistance in the past, going back until last year. Price action, you can see that this particular pair has broken or breached its major uptrend, and we've seen price falling lower along the way to certain points, such as the 1400 mark, broke below that after support. There we go, notice we have another support and resistance level, and we've seen a bounce now. Now this bounce is just below the 50% fib retracement area. You can see it's broken through the 38.2, and it's steadily on the Japanese close or Asian market close going into the European session open. You can see price action at the top end of the wick. You can see a bullish candle followed by indecision followed by equal drive to the upside. So momentum wise at the moment now, intraday for Euro against US dollar is looking roughly at the 50% moving 50% fib retracement area as you speak at 13,800. If price can stay above the 38.2% mark here, we should see extensions higher to 13,800 for this pair intraday. So let's have a look at our intraday time frames. You can see that the 4 hour is still well extended to the downside. Price is testing, and this is very, very important, guys. Price is testing the intraday negative swing to the downside. We've had a slight pullback during the Asian market session. Notice we have higher swings going into this consolidation, and you can see that if I just get the trend line here, there we go. So you can see there's a squeeze to the upside in this consolidation because we've seen a lot of selling. People are now taking profits off the table. So we see this pullback against the major trend. However, on a 4 hour, we're still below this trend line. Swing low, swing low, swing low. Are we going to see a further swing low here? Price needs to close at least above the 4 hour previous swing, or higher in this case over here, at the 13,750. So if we can see price breaking on a 4 hour above the 13,750 and above this trend line, you can see the second part of our CTC is now in our favor, i.e. we have the blue arrow followed by the blue bars. We want the CTC on either side to go blue. That will probably coincide once we have a break above 13,750 on our 4 hour chart. So very, very important. We've had 1, 2, 3, possibly we're going into 20 hours now of potential resistance at this level, and it coincides with a very strong downtrend on the pair. So we could see price stalling at this level here, only to revert to the downside because of the strong resistance level that we're seeing price trading at as we speak. So, want to watch, bide our time, be patient, and we want to see a definite move from the market, otherwise we're going to be trading against the overall trend. There we go. On an hourly chart, same thing. I'm plotting my long-term downtrend. Notice swing lows, swing low, swing low. Prices failed to break above that level. We know 13,750 is a potential resistance level because we've seen price stall at this level for a number of hours. Sure enough, you can see a lot of wicks, shooting stars here. Pull back during the Asian session. This has been stagnated or consolidating. Notice the upside movement, swing highs. The swings are higher, 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 dictating the price consolidation against the major trend as profit has been taken. Now we're at this level here where we could see potential downside movement, primarily because of the major trend and because long term we're still on the negative trend to the downside. This is only a consolidation. If price fails to break above 13,700, i.e. this level here, there's resistance level, this clear resistance level, plus the major downtrend intraday, then we should see or could see a possible bearish sentiment creeping back into this trade and pushing it lower. And our ultimate target would be the major low at 13,500, which on our daily chart is a very strong support and resistance level from the past. So be careful, bide your time, rather wait for a clear definite move above 13,700, a pullback of some sort during possibly the US session before we see further extensions higher. And then we're looking at roughly the institutional moving average as well as price support and resistance at 13,800 or 13,800. Next up is sterling against US dollar. Let's have a look at the daily. Very, very extended downtrend, very sharp move, very, very steep indeed. Price has really taken a hammering over the past month, and we've seen a very steep decline on the sterling against its US counterpart. 1600 was a very strong support and resistance level. A lot of action along this area here for the major part of this year, and we saw a breach of it, slight consolidation on the underside, price action, a lot of trading on the underside of this. Price failed to break above. We actually saw a trade above for a long period of time. We saw quite a lot of movement to the upside, almost 100 pips, but price failed to close above that area. Very, very important when trading. Got to wait for the close of that particular candle that you're trading in order to get a definite idea. Here we had a breakout, a consolidation under a price support area. This is also fake out over here, and then a continuation to the downside. And price has been steadily making its way down to the low ends. We saw a slight hesitation here at 15,800. The low end of this wick over here, this hammer doji, and we saw price tentatively trading. Yesterday's trading range very long, but very indecisive. You can see almost a spitting top doji. Today's range also Japanese after the Asian market session trading. We've also come out very indecisive. That's going into European session open now. Very indecisive on our daily time frame. If I zoom out, daily the next potential target would be the 15,500 mark. We see some possible support and resistance in that area. We've got one quite noticeably here, hesitation at roughly the 15,600 mark. But consolidation under the 15,800, failure to break high on that would obviously see the trend, major trend being downtrend in this case, being retempted, and we should see further selling taking place. So let's have a look at today. So that means daily CTC is well extended to the downside. You can see this, the strategy template working great. Moving average all above price. Same on our 4-hour chart. Notice here again, plot the actual downside movements like we did on our euro. Sorry, apologies for that. There we go. If I can just grab my trend line, it'd be great. Okay, so always put in your support and resistance lines, guys. We know here swing lows depict downtrend movement. Notice how best part of yesterday and today, or the going to this morning, we've seen a lot of consolidation against the major trend. Look at that. 4-hour chart. Would you say 15,700 is a definite support area? For sure. A lot of wicks, hammers here. Price action failed to break below this on our 4-hour chart, consolidating against the major trend, because the major trend you can see here forming swing lows. CTC is well extended in our favor, moving averages evenly spaced out, confirming a nice strong downtrend. And what we're seeing is a consolidation now. What do we need to see now is a bearish engulfing candle against the major trend. Either bearish engulfing to confirm that we're going to see a failure at the ceiling level again and push lower, or to see a bullish engulfing to confirm and a break above the support area at 15,800. Clear break and close above 15,800. Why? Because we've gone to consolidation. Notice there's a consolidation band here at this level. One of Chris's famous boxes. All you guys will probably be giggling out loud, but definitely there is a consolidation area right now as we speak on our 4-hour chart. Do you want to trade this intraday? It's entirely your choice. Me, on the other hand, not interested. I want to see a clear break below this, either the 15,700, bearish engulfing to the downside, or a bullish engulfing to the upside to tell me, heads up Chris, we are seeing a change in market sentiment and we should be looking for potential pullbacks along the way. If 15,800 had to be breached, then we're possibly looking at 15,9500 as our first potential support, or R1. Then we have the 1600, as we know, is our long-term support and resistance level, so we could be seeing a potential pullback to the underside of that as potential R2 and vice versa to the upside. Okay, so that's exactly how I do it, and I think it's important that you guys see it for what it is. Draw these important support and resistance levels, plot the CTC on top of it to give you an extra further confirmation. So as you see now, we're seeing a consolidation against the major trend to the downside. Need to see a break and close bearish engulfing to the downside to give us a momentum to the possible momentum to the downside, and all we do is we enter on those lower charts, and then we obviously manage our positions once we're in the particular trade. So confirmation, sterling looking bearish at the moment, but we are seeing consolidation against the major trend. We want to see a breach of 15,700. If and when we do get that, we want to see a definite bearish engulfing candle to give us that indication for further downside movements, and then we look at plotting our entry levels and possible support and resistance levels to the downside. Very, very important. You can see the swing lows dictating price action as we speak, pushing price to the downside. All we need now is a nice bearish engulfing, a nice long bearish wick to say, heads up, listen here, I'm looking for further downside movement. And then what we do is we look for potential pullback against the major trend to find potential support now on the underside of a price support area, resistance, and then we see a continuation lower. Just have a look in the US dollar Swiss franc. We've had 4 days now consolidation at a major, or the institutional moving average at the 8,900 mark, which coincides with price support and resistance in the past. We do need to see price trading above it to see further continuation to the upside. After that, after Chief went as far as pegging their currency, and we've seen upside movement since then. What's happened now is we've seen price trade on the underside of the institutional moving average, and we've seen hesitation now. A definite consolidation against the major trend to the upside. What we need to see if we want to see any further upside movement is the institutional moving average to be breached, but ideally price to be trading above the 8,900 mark in this case to see further progression higher. Failure to do so, we could see potential pullbacks occurring. So if you look at if you plot a retracement, a fib retracement figure on here, you can see that potentially we have a 23.6 at just under the 8,700 mark as a potential target, 38.2 just above the 8,500 mark, 50% at 84, and 61.8, which will bring us back down to prior breakout support and resistance here, roughly around the 82.50 mark. So got to see a break either higher of 8,900 going into today, or what we're seeing now is shooting stars, indecision, and bearish engulfings along price support. Got to see a breach of 87.50 intraday to see further extensions at least to the 23.6 or 38.2 for the time being. Clear indication here of squeezing. Notice on our hourly, the 50 period moving average acting as a definite ceiling level for this pair, pushing price down even after the institutional moving average had been tested here at 8,900. Got to see a breach, a break below the 87.50 mark to see further extensions lower. We could look at potentially the institutional moving average being retested here at 8,600 as our potential first target if we get that. Notice CTC is still giving us a bullish signal. Got to look at our smaller time frames, i.e. 15 and 30 minutes, to be giving us that indication of further bearishness. We are seeing this CTC at the moment now on our 30 and 15 giving us an indication of downside selling, and we got potentially, as I mentioned, we could look at potentially our first target. Well, we need to see a break of the 87.50 mark first before we see any further progression lower. Otherwise, we're going to see a bounce at that level. So selling occurring as we speak now on the lower areas, but we don't want to be selling into a potential support area. Got to see a break below 87.50 on our smaller time frames to give us any idea of further selling to the downside. On to our last pair of the day, the US dollar Japanese yen. I mentioned in my last video that we saw bearish engulfing at a resistance level, and price was failed to materialize from that. We saw upside movement of the Swiss franc pegged its currency, and sure enough the Japanese yen actually, because it's safe haven structure, we saw price also moving in favor of it. But resistance, 1, 2, 4 days of resistance at this level here, bearish engulfing. Next potential target was going to be the 76.50 because of that, and sure enough we've seen price reverting to the downside and trading well or close to that level as we speak. So possibly as we go into the 76.50 mark, or this current long-term support, you could see a potential bounce or consolidation. Sure enough, we're seeing that on the European session open this morning. Got to see a breach of that to see further extensions lower. Otherwise, what we could do is see a consolidation against the major trend, in this case at 76.50 for the time being, because we've seen it happen in the past. So what we're doing is we've seen price reverting back and trading within the consolidation range, because you can see at 77 we also saw price really moving in this range for the larger part of August and September. So we could see a continuation of that occurring. So we need either see a 76.50 breached, bearish engulfing to see further extensions lower, or we could be we're now trading back in a consolidation range, and we could see price just reverting to the side until the 50 period moving average catches up on this daily time frame. Intraday, hourly, just plot your 76.50 so you have an idea of where price is trading relative to a potential long-term support and resistance level. Notice the swing lows at this level here, depicting price action to the downside. Swing low, swing low, swing low, swing low. So price is definitely being pushed lower, and because of that we should see potential outcomes at 76.50 is potentially long-term support and resistance. Price has started to consolidate as we near the 76.50 mark, or long-term support and resistance. Be aware of that. We might see a consolidation. Heads up, we might, if you see the bars on your smaller time frames, 15, 30, and an hourly chart starting to consolidate along this area over here. We don't see price actually bouncing higher than a price support area here at 76.80, and we see the 50 period moving average come into play. We could see price just consolidating in this range. If I zoom out, you can see a lot of price action just consolidating in this range. Is it worth trading? Not really. So I either want to be trading above the 76.80 mark or below the 76.50. If we are below 76.50, then we are trading below a very strong support area, which would be a very bearish outlook indeed. So be aware of that when you're looking at your trading today. Consolidating against the major trend, US Japanese yen back in the consolidation range. We've got to see a break higher or lower. CTC at the moment now is giving us our sell signal. So until we actually see a correlation where we're getting blue, we're not going to do anything else, because we're still trading below the institution moving average on an hourly chart. So that means all our intraday charts to the downside are bearish. Got to be trading above it to be bullish. Until then, we're consolidating against the major trend. That's it, guys. Hope you have a fantastic trading day. Please ensure that you follow the right money management rules when you're trading templates. Any template, strategy template. Very important, because if you're not following the right money management rules, you just simply aren't going to be winning. Other than that, please keep it simple. It doesn't need to be difficult. A lot of people out there just make their trading difficult. Just follow the rules, trend lines, support and resistance, look for breakouts, plot the CTC in particular will give you the heads up, or that another confirmation signal in your favor. That's all we're looking for as traders. The more confirmation, the more likelihood price is likely to do what we're expecting it to do. Until then, trade serenely.